Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the things we have to be aware of as investors is the changing dynamics and business models that go into the companies that we own. One that tends to happen over and over again is a switch between open systems and closed systems, or vertically integrated companies and horizontally integrated companies. The reason this happens is we reach some sort of end state with a product, and then the only way to compete is take a completely different approach. So, for example, the reason that Apple was able to be successful in smartphones is it wasn't coming from a position of strength in the PC market like Microsoft was. That actually put Microsoft at a disadvantage because it wasn't able to rethink smartphones and create something like the iPhone we know today. Apple was able to do that because it didn't have a dominant business in PCs, and so it could start from scratch. But now Apple is the big player. So how does this company get disrupted? There was an interesting article about Jack Dorsey's recent startup that really caught my eye that I want to bring investors' attention to. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, in the links below. I'm going to start with this article from Apple Insider because I think this highlights exactly what's going on with Apple. A new Twitter rival that Jack Dorsey is starting called Damus, if I'm saying that correctly, will be removed from the App Store because they were offering Bitcoin tipping. Now, Jack Dorsey has long time been a proponent of Bitcoin. That's not a topic that I want to cover here, but the point of this is that Apple controls the ecosystem. And if you want to use a payment infrastructure that is not part of Apple's ecosystem, they're not going to allow it. This is the same thing that has been happening with the battles between Epic Games and Apple, or Spotify and Apple. These are companies that are charging subscriptions, they're charging for gems in games, and they have to pay Apple 30% of their revenue if customers are buying things on an Apple device. If they were in an app, they weren't allowed to tell customers that they could go elsewhere to buy these devices or sign up for subscriptions. This is one of the reasons that Netflix will not allow you to sign up for a subscription to Netflix in the app on an iPhone or on an iPad. You have to do it on the website. Apple has created a closed ecosystem. That's one of the benefits of creating the kind of product that they have. Their argument is that it makes it safe, gets rid of all kinds of spam, and I would argue that all of those are really valuable things. But it does discourage innovation and new businesses from coming along because Apple is taking this tax. How big is it? Apple doesn't break out these numbers, so the exact number that they're making from the App Store and all the transactions that are happening is a little bit unknown. But the services revenue for Apple just for the last 3 months was $20.9 billion. So you're talking about billions and billions of dollars that are on the line here because Apple owns this closed ecosystem. What I think is interesting as new products are developed, new businesses are built that aren't being built with an app first. Where are they being built? They're being built on open platforms like the internet. So you can still access these programs on a device like an iPhone or an iPad or a Mac, but you're going to go to a website instead of going into an app. That simple change takes away the control that Apple has of these products. So you may notice things like newsletters. My asymmetric investing newsletter is built on a website. If you want to access it, the two things that you're going to interact with is the website itself and also email to verify that you actually want to get the newsletter or that's where the newsletter is delivered. There is no app involved. Building on an app first is sort of an old method that developers would use when the iPhone was up and coming and when Apple wasn't exerting so much control. Now, if you want to build a big business, you actually want to break out of Apple's control of the app ecosystem. That's exactly what these companies that I've mentioned have tried to do. Netflix, Epic Games, Spotify. Even the way that Twitter has structured the recent subscription pricing is trying to get away from paying Apple that 30%. They give you a lower cost if you sign up on the website and a higher cost if you sign up in app. That's because they're charging a premium because they have to pay that 30% to Apple. So the real threat to Apple right now, I think, is that if their products aren't significantly differentiated, and most of the applications that are being built on open platforms like the internet, like email, like SMS, text messaging, that gives Apple less control, less revenue from services, less margin. And at the end of the day, that's where disruption is going to come from. It's going to come from developers who want to build new things that would not be allowed under the app ecosystem. We've already seen that this is starting to happen. I think this was a good example of Apple exerting their control over things that they don't want to allow in the app ecosystem. And some of these developers are going to go elsewhere and they're going to build things, and that's going to be outside of Apple. That's going to ultimately be the biggest threat to the company. So I'm not saying that's exactly what's happening today, but as we see more of this happening, as we see more lawsuits, as we see more regulation, this is what starts chipping away at Apple's extreme dominance in tech today, is people building things not in apps, but on more open platforms. So keep an eye on that. If you're an Apple investor, I'm going to keep an eye on it here. Let me know what your comments are in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.